Have you ever noticed something strange? Two people living together, both earning decent salaries, yet constantly stressed about money. Not poor, not struggling to survive, but somehow always tight. Meanwhile, a single income household down the street looks calmer, fewer upgrades, fewer payments, more breathing room. That's not an accident. It's something called the two-income trap. Let me explain it through a familiar story. Imagine a couple in their early 30s. They live in the US or Europe, both are educated, both are working. One earns about $65,000 a year. The other earns around $55,000. On paper, that's $120,000. Sounds solid. But after taxes, healthcare, and social contributions, their combined take-home is closer to $7,000 a month. Now, let's look at where that money actually goes. Their rent or mortgage is $2,400. They justify it because we both work and we need space. Two cars, not luxury cars, just reliable ones. That's $900 a month in payments and insurance. Student loans, another $600. Credit cards for moving costs, furniture, and a few "we deserve this" moments. $400 minimum payments. Utilities, phones, internet, subscriptions, $500. Groceries, eating out, occasional delivery because both are tired after work, $800. We're already at $5,600. Now, add clothes for work, small trips, birthdays, weddings, random expenses, another $1,000 without trying. That leaves maybe $400 a month. For savings, for emergencies, for the future. Two incomes, almost no margin. Here's the uncomfortable part. The problem isn't that they earn too little. It's that their lifestyle was built assuming both incomes would always exist. That's the trap. When two incomes feel permanent, every decision becomes bigger. Bigger home, better cars, more fixed costs. The system quietly nudges this too. Banks approve larger mortgages. Dealers approve bigger car loans. Landlords price apartments assuming dual earners. No one asks what happens if one income disappears. And statistically, it usually does. Job loss, burnout, pregnancy, illness, career change, recession. Now, suddenly that $7,000 drops to $3,800, but the rent is still $2,400. The cars still need payments. The loans don't care. This is why two-income households often feel more fragile, not stronger. Psychologically, it's subtle. When people earn more together, they don't feel rich. They feel allowed. Allowed to upgrade, allowed to say yes, allowed to stop thinking about limits. And once fixed expenses rise, going backwards feels like failure, even when it's logical. So, people stay stuck, working harder just to maintain a lifestyle they didn't consciously choose. Over 10 or 20 years, the cost is huge. Less flexibility, less ability to take risks, delayed investing, more stress around money conversations. Not because of bad habits, but because of structure. Now, here's the shift financially intelligent people make. They don't think in terms of total income. They think in terms of survivability. They ask one quiet question before upgrading anything. If one income disappeared tomorrow, would our life collapse or adjust? That question changes everything. It doesn't mean living small forever. It means building a lifestyle that can breathe, lower fixed costs, more optional spending, decisions that keep choices open instead of locking them in. Ironically, these households often end up wealthier over time, not because they earn more, but because they need less to feel stable. The two-income trap isn't about blaming dual earners. It's about understanding how modern systems reward optimism and punish dependence. Once you see it, you stop feeling guilty about being cautious. You stop chasing upgrades that only increase pressure. You start valuing margin over appearances. And that awareness alone puts you ahead of most people. If this perspective helped you think a little more clearly about money, you can like the video or subscribe for more calm, reality-based finance conversations. No hype, just clarity.